Welcome to the U.S. Department of Housing and Urban Development's Office of Housing Voucher Programs training on the Project-Based Voucher Program. Today's presenters will be Phyllis Smelkinson, Trinessa Sidney, Diane Thompson, and myself, Tiffany Johnson. Today's agenda is inspections, housing quality standards, the HAP Contract Requirements, occupancy and rent calculation, including waiting list and participation selection, lease requirements, family right to move, rent to owner, TTP and HAP, vacancies and vacancy payments, reporting requirements. Now on to Phyllis.
Thank you, Tiffany. First item we're going to discuss are housing quality standards inspections. Before executing the HAP contract, the PHA must inspect all units to ensure the units are completed under new construction or rehab AHAP and are completed in accordance with the AHAP, and units are in compliance with HQS. The PHA may not provide assistance until a unit fully complies with HQS. After the HAP contract execution, the PHA must perform HQS inspections of PBV units upon unit turnover, if requested by the family, and to perform follow-up inspections to confirm HQS deficiencies were corrected, and supervisory quality control inspections. Whether the PHA does annual or biennial inspections would be established in the PHA's administrative plan. Biennial inspections are conducted on a random sample of 20% of the units in each building. If 20% or more of the units inspected in a building fail inspection, the PHA must inspect 100% of the contract units in the building. PHA responsibilities. All inspections, pre- and post-selection, must be performed by an independent entity approved by HUD if these are PHA-owned units. The PHA must provide the independent entity contract information to families during the oral briefing so the families can contact the independent entity directly about HQS complaints. The PHA must take all necessary actions in response to inspection reports from the IE, including exercising contractual remedies for violation of the HAP contract by the owner. Again, this is about PHA-owned units. The independent entity must immediately notify the PHA of HQS deficiencies that are the owner's responsibility in writing. A signed report of deficiencies must be sent to the PHA the same day it is notified. For life-threatening deficiencies, the independent entity must communicate to the PHA owner immediately via telephone or email. The independent entity must confirm receipt by the owner. The independent entity must submit a copy of inspection reports, including follow-up inspections, to the PHA and HUD Field Office of Public Housing. The independent entity must contact the HUD Field Office of Public Housing if PHA owner has not taken the necessary steps to resolve deficiencies. Alternative inspections. The PHA may rely on inspections from other housing assistance programs such as home, low-income housing tax credits, and HUD REAC. If alternative is used, the PHA must certify to the field office that inspection is the same or greater protection than HQS, amend its administrative plan, and monitor inspection method to assure certification. The property must pass inspection. Failure causes the PHA to revert to the PHA HQS inspections. If the alternate system is not pass-fail, The PHA must review the list of deficiency to determine if any cited deficiency would have resulted in a fail of HQS. If a failure would result under HQS, the PHA may not rely on the inspection to determine compliance.
Hello, I'm Diane Thompson. I'm a Senior Housing Program Specialist in the Housing Voucher Management and Operations Division in HUD's Office of Housing Voucher Programs. Housing Assistance Payments Contract Requirements. The Housing Assistance Payment Contract, or as we refer to it as the HAP contract, is a contract between the Housing Authority and the owner for monthly subsidy payments on behalf of eligible families occupying project-based voucher contract units. The HAP contract covers project-based voucher program requirements, including the family's statutory right to move, over and under occupied unit requirements, and accessible units, etc. The HAP contract shall cover a single project, with the exception of single-family scattered site projects. In the case of single-family scattered site projects that are owned by a single owner that have the same effective date and expiration date may be covered by a single contract. HAP contracts for individual PBV units in a project is not permitted, as is the case in the Housing Choice Voucher Program. Instead, all units in a multifamily project under the Project-Based Voucher Program must be included in a single contract. For PHA-owned units, the contract administrator and the owner cannot be the same legal entity. The PHA, acting as the contract administrator, cannot execute a contract with itself as the owner of the project-based voucher units. We covered this in Part 1, but we want to emphasize it here as well under the contract requirements. The PHA must establish a separate legal entity to serve as the owner, such as a nonprofit affiliate or instrumentality of the PHA, a limited liability corporation, a limited partnership, a corporation, or any other legal acceptable entity recognized under the respective state law. On the screen are several screenshots that will follow of the HAP contract itself. And this just basically provides an illustration of the information that's required in each part of the contract. Under Part 1, the parties are required to be identified, the required exhibits to the HAP contract, the actual address of the site, the total number of contract units by bedroom size, the location of the contract units, the services or maintenance to be provided by the owner, utilities that will be paid by the owner, the term of the HAP contract, the initial rent to owner, the designation of accepted units, the number of units that will exceed the 25% limitation that are set aside for qualifying families by unit type. And if the PHA elects to include vacancy payments under the contract, that provision is also contained within Part 1 of the HAP contract. Part 2 of the HAP contract includes detailed program requirements. It includes the owner's role and responsibilities under the project-based voucher program, any adjustments that are made to the rent to owner, the reasonable rent that's determined by the PHA, owner certifications, maintenance of contract units, the requirement that units be maintained in accordance with housing quality standards, leasing of contract units, that is, the number of units being leased, the family's statutory right to move, overcrowded under occupied accessible units. It also contains the default provisions for both the PHA and the owner. Also, the PHA and the owner's duty to provide information to HUD, owner's relationship to third parties, as well as the conflict of interest requirements under the program. The Part 2 of the HAP contract also includes the requirements for subsidy layering, transfer of the contract or the property, exclusion from federal programs, the owner lobbying certifications, and determination of completion for new construction and rehabilitated units. Part 2 of the HAP contract also includes the provision that allows HUD to terminate the HAP contract for wrongful selection of contract units. The terms of the HAP contract. The initial term of the HAP contract is for up to 15 years at the PHA's discretion. The PHA can enter into a lesser term if it so desires, and the owner and the PHA agree. Subsequent extensions. A PHA may agree to enter into an extension, and the PHA may agree to enter into that extension at any time before expiration of the contract. The PHA may also enter into an extension at the time of the initial HAP contract. The additional term can be for up to 15 years, and the PHA must determine if the extension is appropriate to continue providing affordable housing for low-income families. That is a statutory requirement. The PHA must make that determination before entering into a subsequent extension of the HAP contract. The PHA may provide for multiple extensions. However, in no circumstance may such extensions exceed 15 years cumulatively. Extensions after the initial extension may be allowed at the end of any previous extension term, provided that not more than 24 months prior to the expiration of the previous extension contract, the PHA agrees to extend the term and makes the statutory determination that the extension is in fact appropriate to continue providing affordable housing for low-income families to expand housing opportunities. Extensions after the initial extension term shall not begin prior to the expiration date of the previous extension term. The term of the HAP contract is always subject to the availability of appropriations. For PHA-owned units, the PHA and the HUD-approved independent entity must agree upon the term of the HAP contract, and they must agree on any HAP contract extensions. HAP contract terminations are allowed under certain circumstances. If there is insufficient funding, the PHA may terminate the HAP contract. If the PHA is reducing rents below the initial rent, for example, because the rents are no longer reasonable, the owner may terminate the HAP contract. If the owner defaults under the contract or the PHA defaults under the contract may be terminated. If HUD takes an enforcement action, for example, if the units were not selected in accordance with the selection requirements, then HUD may take an enforcement action to terminate the HAP contract or to prohibit going forward to HAP contract. There are some additional HAP contract elements, including statutory notice requirements for terminations and expirations. Not less than 1 year before termination or expiration of the HAP contract, the owner must notify the PHA and assisted tenants of the termination or the expiration. If timely notice is not provided, the tenants have a statutory right to remain in those units for the required notice period. During that period, no increase in the tenant rent is permitted. No eviction resulting from the owner's inability to collect an increased tenant portion of the rent is permitted. During the notice period, a family can accept voucher assistance. An owner may renew the terminating contract for a period of time that is sufficient to give tenants the 1-year advance notice if the housing authority and the owner agree. HAP Contract Amendments. The HAP contract can be amended if the PHA and the owner desire to substitute contract units. It's within the PHA's discretion to substitute a different unit with the same number of bedrooms in the same building for a previously covered contract unit. The PHA must inspect and determine rent reasonableness for the substituted unit. Adding contract units. The PHA also has the discretion to add contract units to the HAP contract, provided that the total number of units that will receive project-based voucher assistance will not exceed the 25% unit cap unless the housing authority and the owner have agreed to accepted units under the HAP contract. In such case, the additional accepted units may be added as well. The Housing Authority also has the discretion to add units to the contract, provided that the total number of units that will receive project-based voucher assistance will not exceed the 25% limitation if the Housing Authority has opted against providing accepted units under the contract. If accepted units are provided under the contract, the Housing Authority can add additional accepted units. The other limitation to adding units is that the PHA must ensure that the addition of the units does not exceed the 20% limit that a housing authority can project base under its voucher program. The units that are added to the contract must be added within 3 years from the date of the initial HAP contract. Removing contract units. When the tenant rent equals the rent to owner, the unit shall be removed from the HAP contract. And we will get into tenant rent and rent to owner a little later in this section. The unit shall be removed from the HAP contract 180 days following the last housing assistance payment on behalf of the family. Specific removal requirements include: where a project is fully assisted, a PHA may reinstate the unit that's been removed from the HAP contract after the ineligible family vacates the property. It's within the PHA's discretion, however, it is not mandatory. If the project is partially assisted, a PHA may substitute a different unit for the unit removed from the contract when an eligible unit becomes available.
I'm Tiffany Johnson, and we're going to talk about occupancy and rent calculation. The first subsection is waiting list and participant selection. The PBV statute requires the selection of tenants for PBV units from the Public Housing Authority's waiting list. The selection must occur in accordance with the PHA's administrative plan. The types of waiting list are the voucher program waiting list, the project-based voucher list, or the individual project-specific waiting list. If there is a separate PBV waiting list, the PHA must notify all HCV applicants, and income targeting requirements apply to PBV. Participant selection. The PHA selects eligible applicants from the waiting list to refer to the owner. When the family accepts the PHA's offer of PBV assistance, the PHA must brief the family and provide any information required in an information packet about this program. If a family refuses the offer of PBV assistance, it does not lose its position on the PHA's tenant-based waiting list. In-place families. Protection of in-place families is very important. Families residing at the project selected for PBV as existing or rehabilitated housing are placed at the top of the waiting list and are given absolute preference if eligible. If an in-place family is ineligible, the unit shall not be selected for PBV assistance. If no HAP would be paid on behalf of the in-place family, at the commencement of the HAP contract, the unit is not eligible to be placed under the HAP contract. Preferences. A PHA may use the same preferences established under its HCV program or create separate preferences for its PBV program. Preferences for services offered at project include: a PHA may give selection preference based on services provided at the project. Disabled residents are not required to accept the particular services offered at a project. Tenant screening. The owner is responsible for tenant screening and selection of families to occupy the PBV unit. The PHA may opt to screen tenants for family behavior or suitability for the tenancy and may deny admission based on this screening. But if the PHA opts to screen tenants, it must have an established policy in its administrative plan. The PHA may give the owner information about the family's tenancy history and the families rejected by an owner do not lose their place on the project-based or tenant-based waiting list.
Hi, my name is Trinessa Sidney, and I am a Housing Program Specialist in the Office of Housing Voucher Programs, Housing Voucher Management and Operations Division. Lease requirements. The owner and the PHA have certain responsibilities in leasing and selecting participants to occupy PBV units. Owner's responsibilities include adopting a written tenant selection policy and criteria subject to PHA approval. Owners are required to screen tenants for behavior and suitability in accordance with the written tenant selection policy, such as credit history, tenancy history, those sorts of criteria. Owners are also responsible for leasing PBV units to eligible families referred by the PHA from its waiting list. Owners provide timely written notification of rejection of an applicant and the grounds for those rejections. Owners are also responsible for leasing to each family the appropriately sized PBV unit in accordance with the PHA subsidy standards. So leasing the appropriate sized unit based on the number of bedrooms. The PHA's responsibilities include completing a mandatory screening of all applicants, and PHAs will be looking for criminal and drug use history if applicants are on the sex offender registration, and also another statutory requirement is to prohibit those that have either produced or sold methamphetamine. PHAs must refer eligible applicants to owners for screening and leasing of PBV units. They give owners the applicant's current and prior address or addresses, and name and address of previous landlord or landlords if known. The PBV unit that is leased to each family must be the appropriate size for the family in accordance with the Housing Authority's subsidy standards. And PHAs may exercise the option to screen tenants for behavior and suitability, but the policy must be established in the PHA's administrative plan. The lease must be in the standard lease form and must include the HUD PBV tenancy addendum. The lease also must be for at least 1 year initially and provide for automatic renewal. The owner cannot refuse renewal of the lease without good cause. The owner may specify a period of absence shorter than the PHA's policy. The maximum period allowed to be absent from the unit is 180 days. The tenant must have legal capacity to sign the lease. Lease termination. Termination is allowed if the owner has good cause, the tenant terminates in accordance with agreement, the lease agreement, owner and tenant agreed to terminate a mutual rescission, PHA terminates HAP contract with the owner, or the PHA terminates assistance to the family. Security deposits. An owner may collect a security deposit from the tenant and use it for unpaid rent, damages, or other requirements under the lease at move-out. The owner must promptly return to the tenant less any damages, any amounts of the security deposit. The owner must also provide a written list of charges to the tenant. Owner may seek additional compensation from the tenant if warranted. The PHA does not provide for or pay any security deposits on behalf of the family, nor is the PHA liable for any amounts owed to the owner by the family. The PHA may prohibit security deposits in excess of private market practice or in excess of amounts charged by the owner to unassisted tenants. This means that the owner cannot charge different security deposits for participants of the PBV program than they would charge to unassisted tenants. The PHA is not liable, again, for any amounts owed to the owner by the family.
Rent setting and rent to owner under the project-based voucher program. Rent to owner is the total monthly rent payable to the owner under the lease, that is the gross rent. It includes payment for any housing services, maintenance, and owner-provided utilities in accordance with the lease. Rent-to-owner does not include other fees and charges, such as meals or supportive services. Non-payment for such services is not grounds for termination of the lease or the participant's tenancy. The PHA establishes the initial rent to owner prior to the execution of the HAP contract. For new construction and rehabilitated projects, PHAs provide an estimated amount of the initial rent to owner under the AHAP. The actual initial rent to owner is established at the beginning of the HAP contract term. The initial rent and all subsequent increases must be determined reasonable by the PHA. The PHA must consider certain factors when determining if the rent is reasonable. Those factors include location, quality, size, unit type, age of the contract unit, amenities, housing services offered, maintenance, and owner-provided utilities. In determining rent reasonableness, the PHA must perform and retain a comparability analysis showing how the rents were determined to be reasonable. They must use at least 3 comparable units in the private unassisted market, on or off the premises, to perform a comparability analysis. For PHA-owned units, the HUD-approved independent entity establishes the initial contract rents. They redetermine the rents as required by program requirements. They determine rent reasonableness, and they must furnish a copy of the rent reasonableness determination to the PHA and the HUD field office. Rent to owner for PBV units. The initial rent to owner cannot exceed the lowest of an amount determined by the PHA, not to exceed 110% of the fair market rent, or any HUD-approved exception payment standard for the PHA's Housing Choice Voucher program for a particular area, minus the utility allowance for tenant-paid utilities, or the reasonable rent, or the rent requested by the owner. To recap, the initial rent must be the lowest of the rent requested by the owner, the reasonable rent, or an amount determined by the PHA not to exceed 110% of the fair market rent, or any HUD-approved exception payment standard for the PHA's Housing Choice Voucher program for the area, minus the utility allowance for tenant-paid utilities. For low-income housing tax credit projects, the rent setting is slightly different. If a project-based voucher unit also receives low-income housing tax credits and is located outside of a qualified census tract, and there are comparable tax credit units in the project that do not receive any form of rental assistance, and the tax credit rent exceeds the fair market rent limitation for the unit size, then the rent to owner is the lowest of the tax credit rent minus any utility allowance for tenant-paid utilities, the reasonable rent, or the rent requested by the owner. The most significant thing to take away from this is that in the case of a PBV project that has tax credit units that are located outside of a qualified census tract where the rent exceeds the fair market rent, the tax credit rent may in fact be the rent for that unit, provided that rent is the lowest of the 3 rent amounts, either the reasonable rent, the rent requested by the owner, or the tax credit rent, minus any utility allowance for tenant-paid utilities. The rent to owner for tax credit units that are located inside of a qualified census tract is determined in the same manner as non-tax credit units. Redetermination of rent to owner. The PHA or the independent entity for PHA-owned units must redetermine rent to owner if requested by the owner, or if there is a 5% or greater decrease in the published fair market rents, resulting in the rent to owner no longer being reasonable. The rent to owner must be decreased regardless of whether the owner requested a rent adjustment, except in the circumstance where the PHA has elected within the HAP contract to not reduce rents below the initial rent to owner. If the PHA has elected within the HAP contract to not reduce rents below the initial rent to owner, the rent to owner shall not be reduced below that amount for the dwelling units under the HAP contract, except if there is an error in calculation that must be corrected in accordance with HUD requirements, if additional housing assistance has been combined with project-based voucher assistance after the execution of the initial HAP contract, and a rent decrease is required pursuant to a subsidy layering review, or if a decrease in rent to owner is required based on changes in the allocation of responsibility for utilities between the owner and the tenant. In subsidized units, the rent to owner may not exceed the subsidized rent. For example, in a 236 project, or a 236 project that continues to have an IRP, a 221D3 below market interest rate project, a Section 515 project under the Rural Housing Services, or any other type of federally subsidized project, and home units. The rent to owner cannot exceed the subsidized rent determined in accordance with those programs. In most cases, that would be the basic rent amount.
Rent calculation, tenant rent, total tenant rent, TTP, and housing assistance payments, HAP. Under the PBV program, tenant rent equals total tenant payment minus utility allowance. The family is responsible for paying TTP. TTP is the highest of 30% of the family's monthly adjusted income, 10% of the family's monthly income, welfare rent, or the minimum rent that has been established by the PHA, which may be up to $50. TTP is the maximum amount the family will pay in rent for a PBV unit. HAP equals gross rent minus the total tenant payment. The PHA makes monthly HAP payments on units that are leased and occupied by eligible families. PHA makes HAP until the tenant rent equals the rent to owner. You may come across some families that you would consider zero HAP families. This happens once the tenant rent equals the rent to owner and the family is paying the full amount of the monthly rent to owner for 180 days, and the PHA has not paid HAP on behalf of the family during that time. At that point, the family is considered a zero HAP family. After 180 days, the unit is removed from the PBV HAP contract. HAP cessation does not affect the family's other rights under its lease. If income, rent, or other changes occur within 180 days of the last HAP payment, that would reinstate subsidy payments on behalf of the family, meaning the family may resume its assistance with the PHA. Rent calculation reporting. PHAs, this is very important. You must use Section 11 on the HUD 50058 Family Data Report in PIC to report all family data, including rent determinations. TTP is listed on line 11Q, so please put the TTP in that section.
Family right to move. Under PBV, a family may exercise its statutory right to move with continued tenant-based assistance after 12 months of the initial occupancy. A family may terminate the assisted lease at any time after the first year of occupancy. The family must give the owner advance written notice in accordance with the lease. If the family terminates the assisted lease before the end of 1 year, the family relinquishes its right to continued tenant-based assistance. If the family wishes to move with continued tenant-based rental assistance, that is HCV, or other comparable tenant-based rental assistance, the family must contact the PHA to request comparable tenant-based rental assistance prior to terminating the lease. The PHA must then offer the family the opportunity for continued tenant-based rental assistance, i.e. provide the first available voucher or place on a mobility waiting list for the next available voucher.
The next section we will discuss is occupancy of wrong-sized units. If a family is occupying a wrong-sized unit, the family must move to an appropriate size PBV unit in order to continue assistance at the project. When a family is occupying the wrong-sized unit, it's generally because the unit has more bedrooms than the family is eligible for under the PHA subsidy standards, or the unit does not accommodate the family's size. That is, there's an overcrowded situation. Occupying a unit with accessible features that a family does not need or qualify for, in such case, the family may be required to move when there is a family that is in need of the accessible features. The PHA must offer the family continued housing assistance in another unit. The PHA's policy on continued housing assistance must be stated in the PHA's administrative plan. The continued assistance can include a project-based voucher unit in the same building or project, a project-based voucher unit in a different building or project, housing choice voucher assistance, or other comparable tenant-based assistance. If the PHA offers housing choice voucher assistance to the family, the voucher must have an initial term of 60 days. The PHA may grant extensions in accordance with its policy. The PHA must terminate housing assistance payments made on behalf of the family occupying a wrong-sized unit or an accessible unit at the expiration of the voucher term, which would include any extensions granted. If the PHA offers another form of assistance and the family does not accept that offer, does not move out of the PBV unit in a reasonable time as determined by the PHA or both, the PHA must terminate the family's assistance at the expiration of the reasonable time period as established by the PHA.
This is Phyllis Melkinson again, and I'm going to cover our last two topics. The first one is vacancies and vacancy payments. What is shown on the slide is the responsibilities of the property owner, the PHA, and the PHA's discretion to provide vacancy payments. The property owner must promptly notify the PHA of a vacancy or expected vacancy. The owner must make a good faith effort to limit the vacancy. The PHA is responsible for referring a sufficient number of families to help the owner fill the unit, a good faith effort to limit vacancy. After 120 days of vacancy, the PHA may give notice to the owner, amending the HAP contract to reduce the number of units by removing the vacant units from the contract. Determine amount of vacancy rent. Include a policy regarding vacancy payments in its administrative plan and opt in or out of vacancy payments in the HAP contract. In regard to the PHA's discretion to provide vacancy payments, the PHA may continue assistance for vacant units up to 60 days only if the owner promptly notifies the PHA in writing about the vacancy, certifies vacancy is not the fault of the owner, and the unit was vacant during the period for which the claim is being made, certifies that it has taken every reasonable action to minimize the likelihood and extent of the vacancy, and requests payment in accordance with the PHA's administrative plan. Now we're going to cover reporting requirements. First is PIC reporting. As was mentioned before, PBVs must be reported in Section 11 of the HUD 50058, not Section 12. Lines 11D and 11F are left blank because portability does not apply to the PBV program. And as far as action codes, do not use the following action codes: 5 for portability, 10 for issuance of voucher, and 11 for expiration of voucher. Do not complete line 21M, which is the flat subsidy amount, and report this no later than 60 days past the action effective date. Reporting in Section 12 and/or other errors must be corrected by the next re-exam. Enter Action 10 if families opt for a voucher after the first year. At lease-up, the PHA records as VO on line 1C and completes Section 12. Do not process an end of participation and new admission when the family goes from PBV to tenant-based voucher. VMS reporting requirements. PHAs are required to report monthly the total number of vouchers under an AHAP or HAP contract, the number of PBVs leased and under a HAP contract, and HAP contract costs that are reported in normal VMS category. PBVs under the HAP contract and not leased reported in the comments section. These are to get credit for these units being in the HAP contract so that the PHA can receive administrative fees. PBVs under HAP contract and not leased, but for which the PHA made a vacancy payment, are reported in normal VMS category, as are their costs. So in other words, the total number of PBV units leased plus the PBV units unleased with vacancy payments plus PBV units unleased equal the total number of units under the PBV HAP contract. As far as noncompliance with reporting, the regulation cited allows HUD to reduce or offset administrative fees if the PHA fails to perform administrative responsibilities. On this slide are the contacts and resources for the project-based voucher program and some of the notices that provide guidance that have also been referred to during this presentation. Thank you.
Thank you for joining us for this webcast. The webcast will be posted on the PBV website. Please periodically check the PBV website for training material and for additional program resources.